Hello, everybody. This is Victor here from Trend Following Trading for Beginners, and here's my weekly update on my sample trading portfolio coming up next. Hi, I'm back. Another week. Well, loads of things happening over the past week, basically. And of course, everything's been covered more or less by fear. The one word fear. The coronavirus. Coronavirus from China. And basically, it's on everybody's mind around the world, not just in Asia. And it seems to be everybody's worried about how quickly spread, and remember what happened to SARS and how many people die very quickly when they contract the disease, and they're expecting similar things happening again. And obviously the shutdown in some of the cities in China is unprecedented. Nobody expect that before, and everybody's worries about people might try to escape, and sometimes even in Asia, people are talking about like World War Z, the zombie film that starring Brad Pitt. Basically, yeah, people just worried, what type of virus coming out and how quickly it seems to spread, and worried that it's similar to like SARS and kill people very quickly. But um, I think in general it's been overplayed. Basically, overall, you look at overall. We have this virus, which is killing, I think, about 200, 300 people at the moment, and infected about 11,000. I mean, 11, yeah, about 11,000 so people at the moment. Still growing. It could be more. But you look at flu in general in every country every year. I mean, it kill a lot of people, just not reported because just like general thing, and it can be treated. But a lot of older people, people with persisting problems or so forth, and when they contract the flu and some of the virus, I mean, people die. People do die. And obviously, those are more like every day. Every year you have those kind of people dying, and it's not the norm, and people just live with it. With this coronavirus, a bit different, and the way it's been played out in the media, as well as how the Chinese learn from what happened last time in SARS, and try to stamp out the problems quickly this time by shutting down towns and stuff. And just it's been played a lot in the media, and also at the same time as Chinese New Year, it doesn't help with the fact that people in China just move around during that time. A couple of weeks before, a couple of weeks after, in Chinese New Year, try to go back home to celebrate, be like Christmas for Western world. To stay in the family, spend some time with the loved ones, and then a couple weeks later after the holiday and go back to work, so to speak. But now everything's been delayed. Towns been shut down, and some companies are not asking the staff not to turn up for another 2-3 weeks. Some of it is like end of February or something. So it's going to affect a lot of general supply chain stuff. But if you look at the overall general population in China, 1.5 billion, and we have about 300 deaths so far. Now one is confirmed, I think today in the Philippines. But if you compare to SARS, is the spread is not as quick as SARS is not as quick as this virus, this coronavirus. But the death rate, when you contracted the disease, and then when you die, it's more like a week or two. In here, in this virus is a bit much longer period than this. Seems to be, I think the health authorities around the world have learned from the SARS virus and seems to have some sort of method to treating it. So the spread is quicker, but the actual effect is much less. And you're thinking about China with 1.5 billion people, with about even if 1,000 people die, it's very unfortunate. The smaller number, the possible, the best, as far as I'm concerned. But it's still, in the big picture thing, is still very much, very small. And also compared to flu, I think in America, someone new was saying last year people died of flu due to complication and other things caused by the flu virus, about 60,000 or something, and that's just America. What about all of the world? So this is what we're just thinking is, all well play, but obviously the market has been up for quite some time, more or less like 10, 11 years straight up, especially in America, and this little fear just play on people's nerves, and then it's been used by the market to basically just dump the shares and you can lock in the gains and so to speak. But there's a lot of implication here, though. I mean, if you just look at China alone, obviously this affect all these people being locked down in some towns. They cannot go back to work, and it might be quite delay a long time. It might happen. Then they'd be shut out of the workplace, so to speak. So a lot of movements within China itself might be temporarily halted for a while, and this affect the supply chains, and not just in technologies, the public clothing and all sort of things as well as imports. So they cannot really export anything or import anything. So it's basically affect China. I think it's going to be in the next this quarter and next quarter, and probably show up at the near the end of the year, so kind of thing. And it definitely showed down the Chinese economy. And this sort of like only just happened. It seems to be a double whammy for China. I mean, it's been more or less have to appease America, also government, and sign the deal, and suddenly just got hit by this virus, and then now have general shutdown in the country and might delayed all this economic activities, and it just we really sad. And the other thing is I think not many people talked about at all. I think overall is this, that with China is 1.5 million people, 1.5 billion people. It has places grows food and all sorts of things, but it's not enough, and they have to import food stuff. Now with people more or less locked down in the town wherever they are, not allowed to go anywhere, and we do not know how long this might take, to for the disease to subside and allow people, the Chinese government allow people to move about within China. Then what about, this is springtime. If you're a farmer, now it's more or less the time to sow the seed, for crops ready for autumn. So if people stop being moved about, so to speak, who's going to sow those seeds? So let's say I just foresee this for my I think it's similar to SARS. In the next 6 months or 9 months, when China is supposed to going through going to this land and try to collect crops and stuff, there's not going to be anything there, because the crops being so late. They might so the production of those agricultural produce from China will be much reduced, and then you have to buy a lot more from other countries. So okay, China has signed a deal to buy more agricultural produce as well as other things from America, but will I suppose it can help, with America able to supply it. But the big question is, can America supply, like I said before, and then how much Chinese need to import? Will they import quick enough? And also send things over into China. So it's, and also distribution as well. We're not talking about 1 or 2 towns that's been locked down. It's quite a lot of towns being locked down in China as well. In China, so how to distribute those food and the food produce and stuff is going to be quite difficult to foresee. But one thing I can, if just logically thinking of near end of the third quarter, second half of the year, the general commodity prices around the world, if similar to SARS time, back 2003, 2004, you see slowly rising. So end of 2020, around 2021, you see a lot of like grain prices, sugar prices, wheat prices all going up a bit, because basically just there's this demand from China. It takes time to distribute and can find its equilibrium. So for me basically is so at the end of second half of the year, there'll be quite a lot of maybe issues in China about getting enough food to distributed correctly in the right place, and this causes probably some other inflation as well. Even though it has possibility to go to U.S. to buy things, but I don't know how it's going to play out. So that's something that's quite concerning. On the other hand, with all these fears that's actually playing around, basically the market just used that fear to drive the market down. Like at the start of the year, I think of because of the general economic slowdown, so the crude oil probably go down anyway. But because of the lockdown and within China and other countries, not I think there have been quite a lot more restriction of people traveling China into other countries. So the aviation is hammered. So is the car, petroleum and so forth in China is hammered, and all of that basically plus the fear factor as well drive down the crude oil. But the thing is quite not being reported, at all in BBC News. I just read from somebody else. Is on internet is that Libya apparently they got some sort of internal issues, and some of the crude oil export has been halved or shut down or something, and other country has been cutting over more than the OPEC, cutting more they agreed to be Saudi Arabia and stuff, and then this should be a good positive for crude oil in general, but the fear factor just driving everything down. And as far as concerned, it's really overplayed, and there's definitely a lot of for me anyway. There's opportunities there to pick up some money from there, but all of this you see the fear factor here, and not this sorry to say to the economy education system to say people are rational and they always make the right choices and so forth. You see the market now driven by fear is not rational. Everything just go out of whack, so to speak. Something that's supposed to go down, go much further down. Something supposed to go up, maybe go much further up. Those kind of thing, and it's just not efficient anymore. So I've been telling my daughter who really like economics, and she want to go to university, have a degree in economics as well. But I basically told her to read the news and think about all this geopolitical issues, and also disease, how they affect economies in general, and also the human nature, that is just not not some calculation, some theory that you just learn from the book, and it will just describe or how the world economics works. And it's just basically the fear factor just drive everything just way out of whack. And it's good learning thing for any student to still think that the market is efficient, or even those professors still support the market efficiency theory. Totally not possible to actually explain it in using that theory to what is actually happening for the past week, with the fear driving everything down. And also the other things that's happening is the impeachment of Donald Trump, but it looks like he's we get out of jail, so to speak, because the Democrat try to push through, but the Republican is not going to allow this to go through the Senate. So most likely just going to be nothing much going to happen to Donald Trump. So let's get ready for his re-election this year. And also the other thing is just happened this week is Brexit affect me daily, and I've been expecting basically the pound's been quite volatile. It has been go down a little bit last couple of weeks, and now come back up again. So it's going to be good, but I think it's going to be a slow burn, snow positive for British pound and also the UK economy. Basically, I was saying this year, next year, slowly but surely the British pound's going up. So it's the economy in UK in general. But it's for me anyway, I think it's a negative for the Eurozone, because the economic powerhouse within the Eurozone is Germany, France, and Great Britain. Germany is basically on its own more or less at the moment. With France, you have the yellow shirt problems, so the economy slowed down. Britain try to get out of the Eurozone, so to speak, and slowly it's not contributing as much into the general economy. And basically everything is on the Germans back, so to speak, to try to carry through the rest of the eurozone. So it's going to be net negative for me anyway for euro. But it is very different. When you look at the market, I was expecting the pound to go up, which it did, but the euro against the US dollar is also going up as well. So it looks like the American dollar is coming down. And I'm not sure is that the case, but because of this fee factor, basically flight to safety, in general when this happens, people go to Japanese yen in general, which is sort of gone up a bit, but also gone into America, not into the stock market, but gone into the bond market, the government bond, so to speak. And the bond yield has been driven down a lot more again, so to speak. And which causes the exchange rate of the US dollar strengthen. So I was expecting to weaken quite a bit because of the economics slowdown around the world. But in general, it looks like this fee factor driving back up now is near. I think it's trying to go back up to 98 mark, but it's stuck there just below 98. So it's around 97 something, 97.7 something recently. But we basically just want to wait and see. My view is, if the economic slow down, the American economy, however, whatever Donald Trump says, great, whatever it is, but I think it days a number, so to speak, because if it's very much like China. You try to export to the rest of the world, and you found what happened in 2008 when everybody else around them is crumbling because of the subprime market problem. So similar thing here. Even if America is good, but around the world, especially China now, which export quite a lot to, is slowing down. Plus, this virus actually happening, and around the world is also having a slowdown economy. I don't think American economy is going to hold up that well in general. And this is just what I said as well. Also, the other big thing this week is the U.S. and Israeli seems to come up with some sort of proposal for Jerusalem, and apparently Palestinian was not invited into the discussion. And Donald Trump and Israel just basically issued this plan and ask Palestinians just have a look. And obviously Palestinians feel very much cheated. They've been saying all along Jerusalem is not something that they go discuss, and so is Israel is going to say that as well. And so this ongoing problem just never go away. But the other thing that is being proposed by Donald Trump is that all those settlements that is in the West Bank and so forth is apparently it is illegal under international law, but the U.S. try to make it legitimate, and so Israeli will love it, because to grab more land away from the Palestinian. And of course, the Palestinian is not going to be happy about it. And basically, I think Saturday they have this Arab League meeting or something, and essentially Palestinians just reject the whole proposal from America. So those are basically being reported over the week. This quite, overall is quite for me from an outsider looking into what American policy and stuff is like that. It's basically once again American just try to tell everybody else what to do. In this case, is in the Middle East. At the start of the year, Donald Trump issued an order to kill an Iraqi general. His defense is saying this Iraqi general is plotting something against the American countrymen. It's bad for America, and killed him. But when people ask for evidence in America, so far, the American government have not shown any evidence. And when they are challenged, they say, well, this is a security issue, whatever, we're not going to tell you. So this basically what you can just judge and jury, just go and tell the world what to do, and also killing people as well. And now, similar thing to the Israeli-Palestinian issue. The U.S. just basically say, this is the best we should get, Palestinian, just take it. Again, it's just basically telling the rest of the world how to live. That's just not good. And similar thing, when you look back onto the Chinese deal that's been signed between U.S. and China, Secretary of State Pompeo basically said China is communist. It is the biggest threat to America. So basically, he's saying, Chinese is no good for American economy, American people, American policy, American country in general. But yet, the American government is forcing China to buy its produce, okay, to balance the balance sheet, so to speak, or whatever. And yet, one way you're telling China is bad, but yet you ask China to buy your stuff. It's a bit. Yeah, I just scratching my head. How does that work? In the Cold War, when America is against Russia, USSR at the time, they don't trade much. They don't even talk much. They just like arm race, going to space race, those kind of thing. And but now China is what? They try to trade with Chinese because there's a growing Chinese population, middle class population, and also a lot more people to feed. And basically, U.S. say, come and buy my stuff, even though I tell you you're a bad person, still selling things to them. If America really think, the American government really think Chinese Communist Party is no good at all, whatever they say, then why the hell trade with them or reduce the trade? But rather do this, they do in reverse, enforcing the socialist slash communist slash capitalist mixture of Chinese state to basically just buy stuff. I remember who has been this same country back in 2008 and before that as well is the one who's been heavily buying American debt, American government bonds and stuff, and now turn around and after basically taking the money from the Chinese and basically turn around and tell them they're bad. It just for me anyway, I just feel very puzzled, that kind of stuff. Anyway, also on Friday, I think on Wednesday as well, the Fed comes out and talk a little bit about I think it's on Friday also, I'm not quite sure, Wednesday or Friday, talk about the economy in general and it's holding its rates, and also about the Ripple market and try to reduce liquidity, so to speak. And yes, it's happening on Friday. This 600 point that dropped on Friday, part of it is not just about the fear about Chinese virus, but also about the possibility of Feds reduce its, pumping money into the economy and basically try to reduce that in second half of the year, and that's negative to market. Remember last time when U.S. Fed tried to do quantitative tightening, reverse of easing, taking money out of the economy from the banking market, so to speak, and you see the stock market just actually go down, and I don't think Donald Trump is going to be happy about it. And Donald has been telling basically power basically to reduce interest rate and go negative like Germany does, that kind of stuff. And I don't think it's be good at all for American economy if we go negative interest rate. Everything will go off the roof as well. And on the back of that, you have quite a bit of results coming through from tech company. And it's amazing. Apple came out with some strong result than what is expected. It goes shoot up. Amazon came out with some strong result. Boom! I think it's on Friday, up about $100 or something. Tesla came out with some lovely result, and then boom, gone up again. It's just like, I don't know. It's just like nothing much is stopping the American market or something. When everybody else around America is slowing down. American company, tech in particular, seems to be reporting everything is fine. So is the banking industry. But I just scratching my head, how does that work? When everybody else is slowing down, your trading partners are having a slowdown in the economy. American still able to, or this company still make loads of money. I don't think. I just logically, I don't think it will last. And this year, anyway, to me personally, the slowdown in the economy definitely, could be more poignant, to show up a lot more in those results in the American companies' result. Forward views and looking into 2020, the economy in general I think it's just going to be slow down. So I think it's just my own gut feeling. I could be wrong, but I'm just being a trend follower. I think there's signs showing up that the minimum I was expecting a side side trade, I don't think it's going to go up like last year. And also, there's this old saying: if January in U.S. market is making, I think the Dow Jones something is end on a positive note, then the rest of the year will be a positive note. But on that front, I just did a calculation from 2nd of January to 31st of January. Dow Jones lost about 600 odd points. So if that's the case, so the rest of the year, if this Wall Street's thinking or saying is correct, then I think definitely not very good for the U.S. market in general. So that's another thing. And this is just all these things just happening, for the last week, so to speak. It's very volatile. I mean, this is only the first month, pardon me, into 2020, and there's so many things happening already. We have fear, we have assassination, we have possibility of war, and also trade issues around the world, so to speak. And it's just going to be very volatile as far as I'm concerned. And because of all these three factors, and you'll see in a minute, that just the sample portfolio changes a lot. And basically, I mean, this is another thing when during time of volatility, driven by fear or utopia, whatever it is, you always have to stick with your trading methodology, so to speak. And you will definitely see a lot of gaps. Sometimes market just jump up or down, depends on whatever maybe the company result or some assassination, oil prices or disease or something just happen and causes the market jump up and down. And this is the time that a lot of people can lose faith. And I think main thing is don't lose faith. Think long term. When you trade. For me anyway, I will trade until I'm dying. Well, in the 80s, if I live until then, or maybe 90s, I hope. And I will just continue to trade. So this little blip, you look at, when let's project yourself, 20, 30 years ahead, and look back, and you will see this a little bit, all this market movement and stuff. But while you're going through this wild gyration of the market up and down, it's very frustrating sometimes. And you see, depends on where your market position is, you can lose quite a bit of money or make quite a lot of money. So this is the time that you might have to have a even keel in your mental thinking, mental maturity, so that way you're actually making lots of money because you're shorting the market. And you don't get too happy about it. Things I think so far is overextended, especially oil. Probably just shoot back up. And I think if this three factor about the coronavirus slow down, or at least there's some sort of medicines out there, or the health authority able to slow down the disease somewhat, that I think definitely there will be a big rebound, and this rebound is going to be quite huge because the drop is so fast and so furious, especially in Asia. And I think with the rebounds will be very quick as well. But for me, it's more like a dead cat bounce, just back to square one, that the market in general overall around the world is slowing down. Crude oil, I don't see it continue to go up, but I don't think it go down that bad. Just very. I mean, side trade is more like gold possibly going up because the general market is down and people is fighting for safety. Yen probably going up, and so to speak. Maybe American dollars continue to stay higher. That is just normal logical thinking. But the type of problem here is for a trend follower, you really have to stick with your guns and look, check your system. Just make sure stick with your system, and don't get basically too frustrated by the market and the news or the volatility and so forth. Especially now, if in the volatile market, when it's volatile, you try to risk as little as you can. So instead of load it up in this volatile market, you say, okay, now market gone down so much, we need to load up. So just in case in the market coming back up, we can make lots of money. Now it's not the time to think of that. Now it's the time to reduce risk. If the market move, it can move both ways, okay, in your favor or against you. So when it's against you, you got to hurt yourself a lot. In your favor, you don't really care because you're making money, you'll be happy. But for me anyway, being a trend for always look after my backside and how much risk I need to risk. And so I basically, now, especially about the pyramiding, I would basically in a volatile market I period be less. Instead of doing 5, I might do 3 or 2 instead, just to make sure that I have money in the pocket, so to speak, for when the market turn around to be more more gentle phase, so to speak. But it just all this come back. You only learn that through trading, and we see how it goes over the next 11 months. But first month of the year is already so volatile, so many things happen. I wonder what else is in store for me. But for me anyway, the big things take away here is all these talks about trade deals, virus, slowdown of the market and things. Something unexpected might happen, just like the virus, the black swan. I think for me, because of the virus, then most likely you look back to the SARS issues back in 2003, 2002, 2003, 2004, you see the commodity prices, the soft commodities, so to speak, the grains, rice, sugars, and so kind of thing, I think will be quite, there's possibility of some market movement over there. So just watch out. Anyway, here is what we're going to be. Basically, this is what I've seen this week, and coming up next is my update of my sample portfolio. First of the bat is Apple. Short term, because of recent volatility, short term is now a sell. Medium and long term still a buy. Amazon, long term is a buy. Short term is a buy. Medium term is a buy as well. So the reason I think on Friday it comes out with quite good set of result. It jumped up quite a lot on prices. So overall is buy across the board. Australian dollar, basically this week, basically this past week, is basically all gone to sell. So short, medium, and long term all sell. Brent crude similar to crude. I mean, just Australian dollar as well in general. Basically, just a sell. So for Brent crude, medium term, long term, and short term is all sell. And for crude oil, WTI, again, short term, medium term, long term are all sell as well. DAX, recent again volatilities. Short term is now a sell, medium term is neutral, long term is neutral. Dow Jones, with the plunge of 600 points on Friday, it makes the short term now a sell, medium and long term neutral. FTSE has been sell since last week more or less, so continue to sell for short term. Medium term is still a neutral, now even long term is also a sell as well. Gold, just like last couple of weeks or so, is buy basically. So short term, medium term, and long term is still a buy. Hang Seng, the epicenter, near the epicenter in China with the Chinese virus going around. Short term still sell. Medium term now change from last week from buy into neutral this week, and long term also change from buy to sell. So recap. For Hang Seng, basically short term is a sell, medium term is neutral, long term is also a sell. Nasdaq appear to be better than Dow Jones, but short term is still a sell, medium and long term is a buy. Nikkei, short term is a sell, medium and long term is neutral now. And silver, this seems to be very odd, just always little brother of gold, but it's not following what gold is doing. So still sell short term, medium term is neutral, long term is a buy. But it's just like, it doesn't seem like it's moving at all. You see gold just going up and up and up. So it's now around 1588, 1590 area again. And silver seems to have problem holding $18. Going up, stay up there like 1820, 1830, and then come straight back down to 1750. Just stay in range, just not moving up and down at all. So basically, just have to wait and see. Chinese yuan, US dollar against the Chinese yuan, basically is more or less because of Chinese New Year, the market in general in onshore it's been more or less shut down because also the virus as well. Now offshore has been weakening quite a bit. So as far as concerned, short term is a buy, medium term is still a sell, long term is neutral. So there's talk about the Chinese. because of the virus going on, the Chinese market might not be open tomorrow, Monday, which I think, because I think the 8 hour has UK time, I think it's going to be 1 o'clock in the morning here in UK, and we'll see if the Chinese market's got open or not. We'll just wait and see. But if it doesn't, then it's another knock-on effect on the Hong Kong market, and probably a bit more knock-on market on Europe as well as America. Anyway, next is USD against Japanese yen. Short term is a sell, medium term is neutral, long term is a sell. British pound against the Japanese yen. Short term is a buy, medium term is neutral, long term is a buy. British pound against the US dollar. Short term, medium term, and long term are all buy. So basically, like I said before, I do expect British pound to move up. It just makes it the economy is moving, and that seems to burn out in the trend as well. But I think this trend will be a very slow burn. It's not going to be massive, and probably quite a bit up and down as well. So it's more like a side trend, so to speak, side trade, but with I think some sort of movement slowly going up. So we just have to wait and see how far it will go up. Next is Bitcoin. This is very unnatural. For some reason, it seems to like following the gold prices. So this time now is basically short term, medium term, and long terms all buy. So recently, it seems to have gone back above the 200-day, 50 days moving average. So it's a buy. Short term has always been buy for quite 2-3 weeks now. So we just basically wait and see. Just slowly moving up. Try to follow what gold is doing, and we'll just wait and see what type of thing. It could be gold go up as well as Bitcoin go up at the same time, but I'm not quite sure. I just basically just watch what the trend does and just follow it through. So basically, more or less, the message this week is volatility caused by fear, caused by people fear of the virus. And if anything of the SARS we learn from them, as the market goes, I think the coronavirus is going to drag on for quite a few more months yet. I don't think it's been peaked yet, so there probably a lot more infections that's been detected in China, so also around the world. Like Philippines, unfortunately, there's some deaths, first death outside China. I think that might spread around in Asia in general, but I hope the death toll is not as high as SARS, and I do sincerely hope that with the SARS epidemic that happens back in 2003, the health authority knows what they're doing, or at least got some strategy out there to try to reduce and contain the virus this time around. So just wait and see, basically. But as far as I'm concerned, it's just volatility, and I think the other thing, like I said early on, is 6 months, 9 months down the line, there could be some sort of food issue in Asia in general. Just China just couldn't grow enough and just go buy from around the world, not just being forced into buying things from US, but you have to go further, continue with other partners to buy some as well. But that means everybody's on the grain side, the soft commodity side probably going up because everybody wants some in China, being just having so many people on the planet. It's just got to drive things up and just take more of the market availability. So we just got to wait and see. And basically, that's the end of the update for this week. I hope you like it, and I will speak to you next week. Thank you, and speak to you later. Bye.